Hi there, my name is Michael Montgomery. I'm the broker with Renzo Real Estate here in Calgary, Alberta, and today we are talking about our statistics for the month of December 2018. So we're looking at what's happened in the month of November for 2018 in Calgary, and it was an interesting month as predicted. What did we see? Well, when we're starting to get into these winter months, if we're starting to look into October, November, December, January, it doesn't really help us to look at the previous month, only because we're starting to move into months that just tend to have slower sales. Oftentimes they have slower listings too. We're going to get into both of these things, but there's slower sales. So it helps a lot more when we're into these transition style months to really look at what happened the previous year. So going back to the year 2017, a lot of our comparisons in this video will be for 2017 for November and then 2018 for November. The other thing we're going to look at are other downturns that we've seen, specifically 2009. So in 2009, we saw a downturn in Calgary, and then how does that relate to where we are today? So let's jump into this. So what did we see this month versus 2017 for November? We saw a 14% decrease in sales. That's a pretty big drop. You can really feel that if you're out there, if you're listed right now, or if you're buying, or if you're in the real estate industry, you can probably feel that. On the selling side, you probably feel it more with these leading indicators such as showing requests, and some of your comparables that you are competing with, they're not coming off the market either. So there's just a lower number of sales. Why is that? Well, it's the same story that we have been saying over the past couple of years, to be honest, and it's with the energy sector. But there's a lot tied not only just to the energy sector, but there's these compounding effects. So the energy sector is going to have an impact, right? If people are not able to have work, and we do have a fairly high unemployment rate, the numbers just came out. We're getting a little better, but we still have a fairly high unemployment rate for Canada. And if people aren't working, then they're not able to jump into the real estate market. And we're so tied to that energy sector. The other thing though, with rising interest rates and those challenging new mortgage rules that did impact people that were already thinking about getting into the market, if they were approved for that 500, now they're maybe approved for the 400, and it doesn't make as much sense for them to jump into the real estate market until they saved up potentially a bigger down payment. That causes a slow in sales. And then the increasing mortgage rates as well, they're gonna all have an impact. So it's not just one thing, it's when you put these things together, you create basically a feeling in the economy. And most of us would say, if we're in Calgary, we feel this somewhat negative energy. And we feel it throughout the energy sector, but we also feel it into the real estate sector. So what does that matter and how does that impact sales? Well, it seems a little bit strange, but sentiments and feelings and what that feeling is out in the marketplace will have a pretty big impact on what's happening in the market. So right now these feelings are of unease, uncertainty, not sure what's going to happen. And these sort of elements do have a negative impact on sales numbers. So it doesn't necessarily mean that your prices are going to drop and the bottom's going to fall out, but it does mean that your sales will slow. And with slowed sales, you will also just inevitably get downward pressure on prices. So what's happened over the past month or so as far as prices? Prices have dropped by about 1%, not a huge amount, but again, we're still trending downward, right? So every month, we're not seeing that into the positive. We're just seeing a little bit of negative, a little bit negative, a little bit negative. And then at the end of the month, end of the year, the cumulative impact, and over the course of 3 years, the cumulative impact can be quite large. Specifically with product types. If you have a property that's 200,000 and below, your sales activity has actually increased. And this makes sense. You know, this is more of the entry-level product. So if you're in that realm as a seller, your sales have increased slightly, but slightly, not huge. But if you're in the realm of say 600 to 1 million, you've been the most heavily impacted over the last month. So these are the maybe move up buyers, getting into the luxury style buyers, into that realm, they have been fairly heavily impacted. Now let's break down, have a look at what's happening with each product type. Detached. Let's chat about the detached market. What is going on? Okay, so the last couple months, there's been a little bit of a change in the detached market, and we've seen some sales slow down. We've seen some prices decrease. These were newer trends for us because they were decreasing, but not quite as much as, say, apartment or attached. So now let's look at what's happened from October 2017 to October 2018, and then what's happening over the course of time. So what we have seen is a decrease in new listings. And that's not just month over month. That is taking your year of 2017 to the year of 2018. So that's great, right? If you're selling or if you want to increase prices, if you get that inventory level down. However, not so fast. We have seen about a 3% decrease in new listings, but here's the big but. We've seen a 22% decrease in sales. So the resulting impact is an increase in inventory by actually in the 20% range. So you may hear that the listings are decreasing, and that is great. That is a good thing. If those listings were increasing, that's a challenge. So our new listings compared to last year, slightly smaller, but our sales compared to last year, way smaller. So that means that your inventory is still rising. And your months of inventory, this stat that we come back to is how many months it's going to take, given the number of sales, to mop up the inventory that's on the market, is increasing. So that tells us that inventory levels are increasing for detached product, even though new listings are shrinking. So what do we need to do to turn that around? New listings can continue to shrink. Great, that will help, but without those sales that are going to come up there and be in line, or if not start to outpace those new listings and that inventory level, you're still gonna have that downward pressure on price and that lower consumer confidence. Now, like we said, let's compare to some other times. So let's look at 2009. 2009 was a time in Calgary where it really felt like the bottom just fell out. And that we're having a lot of comparisons to what's happening then and what happened then and what's happening now. But let's chat about that. 2009, we saw in the detached market probably a 7% decrease in 2009. That's a big drop. So there was a big drop. It was a little bit over 7% actually, a decrease in prices for the detached market. But then go around and look at 2010, it was plus 5. So in 2009 we saw this, boing, boom. It just jumped right back up. For us now, over the course of the last 3 years, we haven't had a 7% drop in detached. It's maybe been 1%, 2%, 3% in that realm, but it's been continuous. So we've had this 1% drop and then 2% drop and then 3% drop, and we're just on this downward trajectory. Where 2009 was ouch, big drop, and then bang right back up in 2010. Not right back up, but quite a big jump back up in 2010. So those are difficult years to compare with. And a lot of us can remember 2009. We might not remember the 80s, but we do remember the 2009 times. And that's when things really fell, but then they jumped right back up. Whereas this time around, we're at this slow hit downward. Now let's jump into what's happening in the attached sector. The attached sector in Calgary, how is this responding to what's happened in November of 2018 compared to November of 2017? Well, it's somewhat in line with what's happening with the detached market. We have seen those listing numbers come down ever so slightly, so around that 2.5%-ish in that realm, but then our sales have dropped by 19. So again, we have that problem. We have that problem of slightly decreasing new listings coming on as compared to last year. So there's less people coming on the market, but there's way fewer buyers. That's a good way to look at it. As we start to move forward, it's going to have to be pretty similar with detached and attached. We need to see increase in buyers. Without the increase in buyers, that month of supply and that inventory will continue to rise. And actually that has been rising pretty regularly within the attached market. It's risen by, if you're looking at it year over year, almost up there in about 40%. It's actually increased since the previous year. So what that's saying is with the decreasing number of listings, that means the sales have to be very, very low in order for those months of inventory to be that high and to be an increase in 40% when you still have a decrease in new listings. Compare that to 2009, basically the same story. We saw a drop of around 8% and then a shoot back up in 2010 of about 5%. And again, we're seeing this slow, a little bit more so than detached, so maybe 3%, 2%, 3% year over year as time is going on. So again, that big slow hit that's happening to us now versus that sharp, acute action that happened in 2009. Apartments. Here we go into apartments. Now this is a different story. This is different from detached and attached. Let's see what's happened 2017 to 2018. Now this is different. We have seen an increase in sales by 7%. So 7% increase in sales. And then get this, a decrease in new listings by 22%. So our months of supply has dropped by almost a little bit over 17% actually. So that's what we're looking for. That hasn't happened in detached and attached over the last little while. What we've seen though, are listings are decreasing for apartments and sales are actually increasing when we're looking at October 2017 to October 2018. So that's good news, right? So we're starting to go in the right direction. There is a little bit of a caveat, and that is that prices are still decreasing. Very likely what you're seeing are sellers that are just becoming realistic to what's happening, and they're saying, look, we got to come down to this price and we got to take this price and just sell it and move on. So the prices may be coming down, but maybe there's a little bit more of an understanding of where the market lies when it comes to the apartment sector. And that's just because of the news over the last 3 years have really pounded on the apartment sector. And prices have came down in the apartment sector, more dramatic than other areas on a grand scale, or more product types on a grand scale. However, we are starting to see a slight increase in sales and a slight decrease in new listings when you're looking at it over the previous year, which is causing a slight decrease in months of inventory. This would be the first time that we've seen something like this happen when you're looking at the previous year to where we are now in October. So that's some good news. Prices are still coming down, so that means if you are selling, great. You might be competing with less, you may have a few more buyers out there. However, if you are still not priced properly, you still won't sell because those prices are there's still that downward pressure. So if you overprice it, you're still not going to have much of a shot. Let's compare that to 2009. So in 2009, apartments dropped by almost 12% in that year. Huge drop, right? Big drop. Turned around and about 8% increase in 2010. This year it's been very slow and a gradual over the course of the last few years, a very slow hit again. So let's just recap. What are we seeing? We're seeing a slight decrease in new listings pretty well throughout most sectors. That's great, a little bit less competition out there. However, sales are not outpacing them unless you're getting into the apartment sector. If you're in the apartment sector, your prices are still coming down. So it's not like we can dance and say that everything's turned around, but we are starting to see some signs there in the apartment sector that maybe there's an increased number of buyers or a decreased number of sellers coming on, a little bit more realistic price points coming out onto the market, and people are scooping them up, especially when you get below that 200 mark or into that entry-level condo area. But if you're in the detached or if you're in attached, you are having a few less listings come on the market over the last year. However, the sales have dropped off. So we're all competing for very few buyers out there. Thank you very much for watching this video. Please let us know if you have any questions whatsoever.